Hello everyone, this is Richard from Price Action Income, and in today's video I want to focus a bit on stocks and how I use market geometry to find important areas where I will consider swing trading from. Now, apart from finding potential entry levels, I also like using a variety of market geometry lines to create a sort of a roadmap that will indicate important support and resistance levels as price moves along into the future. You might even be surprised to see how long a market will respect these market geometry lines by simply drawing them using important past swings or pivots. Knowing where these lines or levels are can help a lot with target placement, or even knowing where to dynamically place your stops and even trail them. So today I will not be focusing on my actual strategy too much, but I hope that you will find some value in how market geometry can help you determine where good areas are to swing trade stocks and when to potentially take profit. I always start my analysis with a bigger picture view of where prices have been in the past and how market structure developed. And to illustrate how I proceed, I would like to start with Apple as my first example before I move on to a few others. Now on this chart I loaded Apple and set it to a weekly time frame so that I can load as much historical data as possible. Then next I want to start drawing my market geometry lines in an attempt to find the angles at which this stock has been expanding in and to see whether price has in the past and recently respected those lines. First I want to start with a simple channel drawing, and on a weekly chart you will have to play around but with different pivots to see how that channel contained price before setting on a preferred angle. Now, as a rule of thumb, I will typically draw my first channel line from an important low before price really started trending. And for me, that low on Apple was the low set back in early 2008 before price really started going upwards in this very strong bullish trend. Since we are dealing with an upward trending stock here, I need to connect my first lower channel line to one more other low, making sure that I at least have 3 pivot points from the past that touches that line. Let's draw that channel line in first, and we'll select the low in 2009. We can draw it upwards, and like I said, I would prefer to see a touch of the lower channel line in this case because the market's going upwards at least 3 times. 1, 2, and 3. The next I have to set a channel width, and here too, as a rule of thumb, I like to select an important pivot that is at the widest point perpendicular to my lower channel line. So not this one here, because this one over here would be wider perpendicular to the lower channel. And using those pivots shows how price struggled for a while to break through the upper channel line, and when you get a proper break above your channel line, then it's a good idea to double up on that channel line using the same slope as you did before. And to do that, I simply click on my channel line, Control C and Control Paste, and double up using the same angle or the slope as I did before. And let me just get rid of this writing over here, and you'll see that we have at the end of, or let's say about September last year, reached the upper channel line, and price has since sharply declined again. Now, apart from channel lines, I also like using pitchforks quite often. And when I draw my standard pitchfork from the same low that we used in 2009, we just get that on point and connect it to the high in 2012, which actually resulted in the first decent correction lower, and then use my last anchor point on the low. Let me just get that done properly, of about April 2013, and then you'll also see that price has at the end of 2018 reached the upper red warning line, which is this red colored line up here, and then declined lower. Just a quick note here, I often get asked how I know which pivots to use when drawing my pitchforks. And the answer is that I like to follow historical price action to see how price was dancing around my important median lines and how well they were respecting by price action in the past. So if I just have to quickly get rid of these channel lines so you can get a better view of that, by simply selecting this high and this low here and following price action as price proceeded into the future, you'll see that price has on multiple occasions, when reaching the important, like a middle median line or this 50% dash line, reacted from it. Even here, price came down. It reacted to the lower channel line, or sorry, the lower median line, went upwards again, came down. We went to the 50% between your lower median line and your low red warning line. Price gravitated upwards again. For a while it was stuck around here, what we call vibrating above and below the center median line. It reached this important 50% dashed line, and eventually when price reached the upper red warning line for the first time, this entire trend halted in its tracks and it reversed pretty strongly lower again. So if price therefore reacts well to my median lines, I then know that the probability that price will react to those lines again in the future and before they get there is pretty high, like it did recently in April and then again in July. It broke down, reached the lower median line, shot straight back upwards, and has since really been struggling to get through the upper blue median line of my pitchfork again. Now just remember, these lines or market geometry lines were drawn on a weekly chart, and they have therefore proved to be very strong support and resistance levels in the past, and they will therefore probably be important levels in the future, since they determine the angle or the slope at which this market is operating in. It would therefore be wise to take note of these levels when swing trading, so that you can either use them to enter trades, setting your targets, or know when not to enter position that's going to run into one of those lines without a good risk versus reward ratio. Okay guys, so that was a very quick demonstration on Apple as an example. But next I want to show you a chart of Boeing, or BA, which is a ticker symbol, because I was recently asked by a student of mine to have a look at Boeing's price action on a daily time frame and to draw some market geometry lines to reveal important support and resistance levels to take note of. And I have to say that finding the right pivots and operating slope of this stock took some time, and I had to be quite creative. Either way, what I have on my daily chart are only channel lines. And if a trader knew about these lines, then some really cool swing trades could have been taken when price reached those lines in the past and most recently around August. I was first asked to perform this analysis around April this year, but if I had to figure out what the angle or the operating slope of this stock, in this case Boeing, would be, then the best roadmap that I could draw, possibly using my channel lines, was to select this high over here, connect it to this high over here, so that we at least have 1, 2, 3 points that's touching the upper channel line, then bring it downwards to the widest point perpendicular to that channel line, and it would give us this line. You can see that recently price struggled to get through there. First it couldn't break through it on 1-2 occasion, broke through it, went upwards, couldn't get through it again, and price moved lower again. Now if you were to double up, or in this case double down, the same channel width and paste it to the bottom of this lower channel line, then you'll also see that the low in December 2018 was an important low. You also see that we had momentum divergence on a MACD indicator at that low. As price approached this low, it shot straight upwards. It kind of shot straight through these lines. It did hold there for a while, even the upper channel line, but it did not manage to break the 50% dashed line of this upper channel either. So since then, price has been moving sharply lower, and it wasn't until recently that price reached the lower channel line, remember, of the line that we've drawn already, that was on this chart, because we've done this analysis about in April, and prices then reversed strongly upwards, in this case again on a pretty decent momentum divergence. Now just using these channel lines that I drew on my chart gave a pretty decent looking swing trading opportunity when price reached the lower channel line of this line that we've had there before for the first time, and like I said before, on momentum divergence. Now here's another thing you could do if you were to believe that this was or still is just a correction and price might be going higher again. Then I had these lines drawn from the April high to the July high and brought it back to this low here in June 2019, and you'll see that price picture perfectly with the confluence of this lower channel line and this lower channel line on momentum divergence gave a pretty decent setup for an opportunity to go long, with targets that could either have been placed by this trader at this center channel line or even higher, so that you're aware of where these lines are, and which makes really good targets to be aiming for. Now, another technique that a lot of swing traders use, and if this is something that you could probably consider doing yourself when swing trading, is to actually have rather wait when price reaches important lines for the first time, to wait for your signal line to cross above your MACD line and use that as your entry confirmation, and then place your stop below market geometry lines rather than just some arbitrary, how can I say, lows of candles, etc., etc. But keeping in mind that as long as you have very good or a healthy reward versus your risk placement, then yeah, the trade is on. And this is just another technique that swing traders can use. That's just a little bit more, how can I say, a bit more of an entry confirmation rather than just entering right at in line. But in this case, which is a really good example, we had a multitude of different conditions setting up at that low here. We had two different, very strong market geometry lines used from a pretty high time frame. We had momentum divergence, and as price actually reached that for the first time, and the signal line crossed upwards, price shot higher again. But like I said before, this might still correct lower or it might go higher. But what's really cool about this technique is that as long as you know where your median lines or your channel lines are on the bigger picture, they make for really good target placement, and also shows you how to safely trade your or trail your stops behind price without getting stopped out too often. So in the end, traders, it really all depends on what your strategy entails. But I like using my bigger picture market geometry lines and pitchforks to find important entry levels, typically where there's a confluence of multiple market geometry lines. Then using only one indicator, like the MACD for example, paired with multiple time frame analysis, I will enter into these trades. Okay guys, I hope that what I've shown you today will prompt you to go draw those market geometry lines on your own favorite stocks, so that you're aware of them the next time you make your own trading decisions. So if you liked what you've seen here today, then please hit the like button below this video and don't forget to subscribe to my channel. I also left a link below if you're interested in discovering my entire strategy. Until next time, this is Richard K. from Price Action and Income. Goodbye.